Hello, mortgage broker community. We have a very special Facebook Live here today. I'm proud to introduce Scott Tansil, EVP of Franklin American Mortgage, division of Citizens Bank. He is Executive Vice President of Capital Markets and TPO. Scott, welcome. We appreciate you taking the time to speak with us today.
Yeah, thank you, Anthony. Very glad to be here. Awesome for you guys to include us in your broadcast. Excited about giving some industry updates and insights about how we look at wholesale lending.
Well, we appreciate it, and just for the broker community, and we got a bunch of people coming on now, but I'll start my introduction of Scott and really Franklin American, because I think it's one of the most important partners of the broker community is Citizens Bank, and the big why behind that is Citizens Bank is the largest bank in the wholesale space, and to be honest, their success is very important to the broker community to hopefully one day lead to maybe more banks entering the wholesale channel. So it's more important to me as the chairman of AIME and to the broker community that not only do we support Franklin American from a partnership standpoint, but we definitely want to see them be successful long term, because that is kind of the gateway to more well-capitalized players coming in the market. So, to talk a little bit about you guys, 24 years in wholesale, so not new to the space at all. You probably have the largest legacy of any lender in the entire channel, which I'm sure you guys are proud of. In addition to that, last year, you introduced a non-solicit program, a customer for life version of basically telling brokers, hey, listen, Citizens Bank acquired us in August of 2018, and despite fears, we're committed to the continuity of the relationship between the broker and their customer, and we fully intend on supporting that, which was a huge step and a huge sign of the partnership. So, Scott, if you could give our community a little bit of a feedback on you as EVP of FAM and your history with the company.
Yeah, so first of all, I've been at Franklin American for over 20 years. Started out as CFO, evolved into more of a COO role, and then as the owner kind of stepped away, led the company holistically. So I've been there for a long time, surrounded by incredible leaders. So very excited about the opportunity that we've had as a company in the space for many, many years. I know that when we got acquired by Citizens Bank, that was an interesting dialogue, right? Because it was the first big acquisition post-financial crisis. But I could not have picked a better partner. A lot of people talk about, hey, Citizens Bank picked Franklin American, but we also chose them. And it's been an incredible partnership. Their love for TPO has been evident. Their support for Franklin American and how they brought us in has been incredible. So we've been able to take the very best parts of a large national independent mortgage company and couple that with a very strong capitalized bank. And those two things together has really put us in a different position. We're participating in wholesale lending entirely different than we were 2 years ago, allowing us to do things like non-solicitation. I think we bring a whole new meaning to partnering with the broker. Those are your customers, and we're going to care for them. Historically, we would take loans and service those for a while and sell those off, and we didn't really have control of those loans once they left our hands. So now that we have our own private label, internal servicing platform, we're not outsourcing that. We're holding these loans. It's been a real positive play for us, and our brokers that do business with us have been very excited about it. So we feel like that's a real difference maker for us in the space.
Yes, Scott, I think that's an important thing, and obviously I've learned a lot about servicing an MBS market, and I got to visit with you and your team. It's already been 6 months, but I visited your headquarters and we spent some time talking about that, and you really helped educate me on sort of the difference that Citizens Bank is going to make to Franklin American as a servicer, which is not only are you going to securitize these loans and lend your own money, but you're going to actually keep them. And right now in our space, I mean, truth of the matter is not a lot of lenders have the capitalization to retain servicing. It's very capital intensive, and obviously you guys are committed to that business model.
Right. It's been for us to be part of the balance sheet of the bank has been really nice during this time. I mean, clearly, we need a very healthy industry. We need lots of lenders, and not wishing ill will against anyone. As a matter of fact, hoping everyone makes it through it. But certainly this particular market we've been through, was very interesting because you had a lot of liquidity issues hit a lot of people at the same time. The margin calls on hedge positions, advances on servicing. There's a lot of scenarios that really created a crunch on cash. I mean, certainly the 10-year sustained rally down to 66 basis points of where it is today has created, a little bit of volatility and some concerns around, the MBS market in general. And then you throw in, all the things that are happening from the GSEs and changes, and that we're all trying to digest, and making sure that we're putting ourselves in a position to deliver good loans to the GSEs is at the forefront of our thoughts every day.
Yeah, I think in our conversations with Mark Calabria at FHFA, one of the things that kind of stuck out to me was the fact that they definitely are concerned and have major concerns about liquidity of non-bank servicers, and I think that concern was probably brought under a magnifying scope over the last 90 days, and I think that in the future, at some point here, I don't want to put a timeline on it, but I think that's going to change. I think leverage requirements are going to change. I think capital requirements are going to change, and obviously, as a bank, you guys are well positioned to meet or exceed any of those requirements that could be possibly imposed.
Yeah, certainly. I was listening to one of the White House briefings, and Treasury Secretary was on, and he mentioned concerns around capitalization, and obviously the crisis of 2008 left a lot of heartburn with servicing in mind. And now that we have this forbearance issue and lots of loans going into forbearance, and what happens to advances, and who's going to cover those, and what's the impact of the MBS, and how's that economic going to perform from that perspective. So certainly it's going to be interesting to see how the post-crisis of this plays out with rules around aggregating loans, and what's going to be the requirements for balance sheets to be able to handle and aggregate. So that's going to be something that we'll need to keep an eye on.
So I'm going to transition here. Let's get started with talking a little bit about, the GSEs, LLPAs, and how that's impacting pricing and products. Obviously, a lot going on over the last 90 days. We're still in the middle of an economic, downturn. I mean, we have, I didn't see the number today for job losses, but as of last week, we're at 36 million. Right. We're approaching 40. This is an unprecedented time. So talk a little bit about how that, those LLPAs are being impacted today.
Yeah, so I mean, clearly everyone is, not immune to the LLPAs that are in play because of forbearance. So, as unemployment is, increasing and things of that nature, as lenders, we look to always put ourselves in a position to deliver a loan to the GSEs that's in good standing. And clearly today, with being in a refinance boom, we've got a different set of rules on loans for cash out refinances and rate term refinances. So once a loan closes, what happens between close and securitization can impact the delivering of that loan to the security, the MBS. So obviously on rate and terms, the big LLPAs out there, 500 to 700 basis points, and that's not built into anyone's margins, right? No one wants to endure that. So you're doing a lot of things around borrower attestations and verbal verification of employment closer to the close date, and that's certainly something that everyone's watching. And then obviously the cash out refis, if they fall into the forbearance between close and securitization, they're not even securitizable. So that's created, another pressure on liquidity. And as a bank, we're able to put those loans on our balance sheet, and it's not a big issue, but certainly creating some issues. But as a lender, and many lenders have done this, you start to tighten your credit box, right? Raising your FICO minimums, lowering your DTIs and your LTVs, taking away second homes and real estate investments and things of that nature. So those are the things that you try to get to, because ultimately you're trying to figure out, if I'm stuck with this loan, whether you be a bank or non-bank, if you have a better LTV or a better debt to income, maybe that borrower could sustain paying their mortgage and not go into forbearance. So you're trying to limit, what loans fall into a category that would not be securitizable, or avoid you from having to pay the huge LLPA. So certainly not necessarily a price hit to those loans, but more of a tightening of what you're trying to bring in with those loans. So it's just been an interesting time.
And on that subject of forbearance, not specific to Citizens, but more or less from a market perspective, how has that impacted the MBS market? How has that impacted, servicing values, MSR values? Like, what impact has that had?
Yeah, so I think early on it had a bigger impact than it's having right now. Obviously, the liquidity issues that came about with the sustained rally and margin calls, and then concerns around the MBSs, who's going to do the advances and things of that nature. A lot of those have kind of been defined. The Fed stepped in, buying mortgage backs have helped out quite a bit. And there for a moment, I mean, the MBSs were the value, which is crazy, the economics around those. And of course, like any investment, before someone invests in something, there's going to have to be a clear economic, gain or return analysis, et cetera. So, certainly we've seen some clarity around, servicing advances, what's going to happen at the end of forbearance. The agencies have been very clear. We had that 30, 45-day period where every single day you woke up and you wondered, what the GSEs were going to say and do. And look, they did a great job. I mean, everyone reacted. We're in an unprecedented time with how to handle this, because we've never shut the economy down before, right?
Yep.
So it's been, I feel really good about the MBS market compared to 45 days ago, because effectively there was a vacuum. People vacated the acquisition of MBS, and now that we've got more clarity around it, I think we're seeing some calm there. And the 10-year seemed to have settled down at 65, 66 basis points. So that's been helpful too.
Yeah, I mean that is the big question mark right now, is what's next. And I've talked to some people earlier this week, and there's kind of a concern that, hey, listen, we could see the 10-year take a big move in either direction right now.
Right.
We kind of saw that on Monday with this potential of a vaccine that came out. We saw the market really react to that. So, you kind of know if if there is progress on one side where rates could go, and if it goes the other direction where rates could go. So I think volatility, there's some potential for more market volatility.
Right.
With that said, let's talk a little bit about crisis management and what you saw over the last 9 days, because, I've had a lot of people on here. I had a conversation yesterday with Martin Warren and Kevin Perano and Brian View, and we were talking about, we go back on crisis management, and you talk about, back, the financial crisis. Obviously, you were Franklin American then. That was one situation that was prolonged and unprecedented at that time. This is a whole different level of crisis management. So talk a little bit about what you experienced at Franklin American.
Yeah, so crisis management, near and dear to my heart. I mean, and over the years, you look at various ways you've handled yourself as a leader, and you looked at ways maybe you've overreacted or underreacted. And what I've learned personally is, your first reaction is the most critical one, because everyone is looking at their leader. And certainly I'm no pandemic crisis management leader, and I didn't have the magic answers, but we certainly came out quickly, our leadership team. And one of the things that was very advantageous to us, one of the first kind of, bells and whistles of this crisis for not only mortgage, but for all industries, was work from home. And to the credit of Bobby Frank, who runs wholesale for me, 6-7 years ago, came to us and, knocking on my door going, hey, we need to have some work from home scenarios, more related around snow days. We couldn't get people. So all of a sudden, we cave in and we create this work from home process. And then, when this came about, we just basically said work from home. And we had our best month ever in the history of the channel in April, working 100% remote.
Wow.
So it's been really good from that perspective. But the other thing that was important, a lot of times in a crisis, it's good to be with people and huddle up with people and feel, misery loves company a little bit. And when your people are dislocated, because culture, which I know is a very abused word when you get corporate speak, but culture for us is very important. Our colleagues, our connection, the way that we treat each other, our camaraderie in our workplace is very, very important to who we are. So early on, one of the things that I asked my team to do was to communicate and connect, not only with our colleagues, but with our brokers alike. And we've really done that well. People are working at home, you have a scenario where, hey, all right, they're used to working at home a couple of days, but now all of a sudden, maybe their children are out of school working with them. They have, a spouse who have lost their job. They're stressed there. They're managing in a household. So communicating and staying connected, and things like being able to Zoom or WebEx and get on, FaceTime or whatever it is, that was one of my biggest criteria. Let's communicate, connect. And that's just been a really, really unbelievable thing for us. We've been measuring our productivity. We've actually seen enhancements to our numbers. So, beyond this particular COVID-19, I think, the world's going to be looking at working from home and how that impacts, the productivity and profitability of any organization. But, again,
I agree.
Yeah, again, there's no playbook for dealing with the pandemic. But the last thing that I think is important as a leader in crisis management is allow yourself to be real. I don't have all the answers, and I have fears too. I mean, I was wearing a mask and gloves at the grocery store, right? I mean, so this is a real deal, and I think being real and being vulnerable to a degree is also helpful for your colleagues and your people to believe in what you're doing. So I think that's just kind of how I handle crisis management.
Yeah, I think that there's a lot of good things there. I think number one, the work from home element of it is it's been shocking how productive the at least the mortgage lending workforce has operated, because I'm sure you saw it in IMF. Congratulations to for Franklin American for having a record month. I mean, that's awesome. But the whole industry had a record month for Fannie Freddie productivity, or volume. So
Right.
like for the entire industry to be working from home and still pump out a record month, I mean, it says a lot about what the possibilities are. And I do think that, this is going to change the game for our industry for quite some time, because, one of the things we've seen with these ups and downs in the marketplace is scalability and scaling up. But
Right.
now with the on-demand workforce that's, productive from home, I think companies will think a little bit differently about that. So one thing I want to get your opinion on, and we talked about this, when I visited you guys in November, and I want to see if it changed, which is, what's your market outlook here for not only 2020, but also 2021? Obviously, COVID-19 has changed the game in a big way, but with knowing what you know now, what is the outlook?
Yeah, so I mean, clearly, there's still some economic factors out there that cause concern, right? I mean, we don't need to see unemployment, continue to climb in the 2 and 3 million number range every week. That's not healthy. But and clearly, a vaccine changes a lot of things. But the one thing that I think is true is that our economy is resilient, and we've seen, even a nice bounce back to, the economic sector. Companies are adjusting. And I don't think we're going to see rates go exponentially higher anytime soon. That would be the opposite of trying to enhance your economy. So I feel like we're in a really good place for the remainder of this year. I think I love the broker community. They're so resilient. They make things happen. So loans are getting closed. They find ways to get things done. So I really see a strong finish to 2020. If you look at 2021, you've got, the Fannie and Freddie are showing like a 1-2% range up or down. And then the MBA is at -20. So there's a broad, kind of a broad range of what could happen. But, with where we are and the things that we have going, from a Franklin American Mortgage perspective, we recalibrated our model, going from an independent to a publicly traded bank, and being able to take both of those components and merge them together. We're in a really interesting growth mode in how we're approaching the business. So we've got some awesome fintech announcements we're going to be announcing, with one being Cloud Virga. Very exciting time that we're going to be, doing some things that's going to be great for our brokers. Our product and pricing engine that's going to be rolling out later this year. We talked about that at last fall. Power LX is kind of our brand, so we're going to be bringing a tremendous amount of energy to the space. And not only to mention that, but the bank is so behind wholesale. There is so much excitement from the top of the house all the way down to this channel that is creating a frenzy. So, we've always kind of outperformed the market and did different things, and, got into a little bit of a stagnant position toward the pre-acquisition dates, because we were in that hamster wheel of doing loans, selling loans for bulk to raise cash and things of that nature. So now we're in this different mode with big balance sheet, with a great, push behind us to go out and do more volume and do great things. So, we feel like 20 is going to be great. 21 is going to be better. And we've got, a lot of transformation from a technology perspective we're working on. So the excitement, the leadership team that I have working in wholesale, they wake up every day and they obsess over how we can make our brokers better and how we can make wholesale better. So we're just in a really good position, excited about the future of this channel.
It's exciting. I mean, and obviously I had an opportunity to talk to Bobby Franks in Irvine for our Activate event. And I think the technology thing can't be understated. There's a lot of people in the marketplace have gotten stale and stagnant. I think that's why there's been, sort of market leaders have developed off their investments in technology. And
Right.
it's good to see that, obviously that you guys are kind of going to be coming forward with some really big announcements here in the next 18 months to enhance that platform and also the user experience. And also, hopefully this all bleeds down to a better consumer experience for everybody. And that's really the goal.
Right.
So with that said, outlook here from a wholesale perspective, when you think about the broker channel, and obviously the bank thinks about the broker channel, do you see yourself, I know where you guys ranked for 2019. Obviously, you had a record month last year. It sounds like you're probably on pace for some of the projections that we talked about in November. Where do you guys see yourself being here in the next 18 months? Do you see, 20% growth, 30% growth? What's the goal?
Yeah, look, as a publicly traded company, I really can't give forward-thinking thoughts on but I can tell you, we definitely plan to grow. We believe wholesale is going to be really the future of mortgage banking. And let me just say this about the broker community. I believe they create a very stable and competitive playing field for the consumer. They make it fair. They make sure that consumers are getting the best deals. We don't need 8 or 9 lenders in the world, right? We don't need the Mr. Potter. We need lots of George Baileys out there with their broker shops open, et cetera. So we feel like really that and you and I had a great conversation here in the office a few months ago about where we think the market share of wholesale is going and where the brokers. I think it's easier to become a broker. I think there's lots of opportunities for loan officers to become brokers, the technology that's available to them, the things that we're rolling out to help them to do their day jobs, right, and be great front end warriors for the space. We actually consider the broker a part of our family, and they are part of us. And so with that being said, I feel like we're going to really lean in heavy in wholesale. We're doubling down. The bank doubled down when everyone retreated. They bought Franklin American, and obviously it's paying off. We're having great success under that combined entity. And so we really look forward to, really growing this channel. For me, it's never been about how big are we, it's how good are we. And that's what we're trying to get to. And I think, we're adding lots of new brokers. That's one of our big goals, is to get lots of new brokers added to our base. Our sales team is they're obsessing over adding new brokers and making this experience good for them. So I think you'll see us grow in many ways. I think our distribution model will grow. We're nationwide, obviously, but we're going to have more AEs added. We've got open spots for AEs. We've got great plans for adding those folks in certain markets. Adding brokers and things of that nature are basically our direction. So that's just going to turn into volume, right? We're going to do more volume, and that's what we're focused on for next month and 2021. We're working on 2022. Our thinking, right? We're thinking long term in this channel.
Well, I think for me, and I'm sure for everybody that's watching this and going to be watching this over the next couple of days, that can't be any more exciting to hear, because obviously we've been excited about the growth in the broker channel. We've seen broker market share go from 8% in 2017 to now we're at 18.5% in Q1 of this year. Our expectation is that'll exceed 20% for the year. And really, incrementally, I think what's happening here is, at the end of the day, for the consumer, and I think that's, of course, the most important thing. That's what's going to win long term, is a competitive broker market, and that's both at the lender level and at the LO level, is better for consumers. When people compete, they compete on client experience, they compete on rate and fees, and at the end of the day, if consumers are winning, then there's going to be more volume in the broker channel. And I'm excited about it. And the most exciting thing for us has been this year is most of the growth is happening in the middle of the country. In 2019, and I would say the second half of 2018, most of the growth from the broker channel perspective, as far as new LOs, was on the coast. It was in California, it was in Arizona, it was in Florida, it was in New York, and on the East Coast. And in the last 6 to 9 months, it's been Wisconsin, Nebraska, Arkansas, everything in the middle of the country. And that's exciting, because for consumers in those markets, they're getting exposure to brokers for the first time in a little while. So, Scott, you gave us a half hour of your time. We appreciate it. I want to say to everybody that watches this, if you're interested in getting connected with Franklin Citizens Bank, you can email partnerships@aimegroup.com. We're happy to connect you. There's some really big things coming up here in the next 18 months that we're proud to be a part of and see. And to me, I think for everybody, it brings a new level of optimism to be able to say that the biggest bank in our channel is not only investing in technology and in their future, but they're doubling down in a big way. And you heard it right from the leader of the organization of the wholesale channel. So, we're excited, Scott. We really appreciate you. You guys have a great team, a great culture, and you guys have been unbelievable as a partner. So we're excited. I hope Bobby and everybody's doing well, and we're here for you in any way we can help you.
Yeah, thank you, Anthony. You guys are awesome. You do a wonderful job for the broker community. We look forward to working with you more and more in the future.
Absolutely. You have a great day, and we'll hopefully see you very soon.
You too. Thank you.
Take it easy, sir.